Good afternoon, everyone. This is Chrissy from Solstice ATR. You can find us on the website, on Twitter, Instagram, on Discord as well. We use adaptive algorithm to give us signals. You can hit the subscribe button if you like and join the weekly free video. We use this for illustration use. We are not a broker-dealer. Past performance doesn't indicate future results. Before we get started, I want everyone to understand what the signals have been telling us in the stock market. Let's go to the next slide and we'll go one by one. As we can see, I have labeled it what the signal telling us about the stock market. Is there a battle for leadership? What I mean by it, there's different equities, ETFs, as well as stocks have been acting up to the upside and some are retracing. Long-term outlook in the market are still favorable. Historical says there may be a drawdown between 5 to 9%, could be arriving as March 22nd. We're not predicting, we're just looking at historical fact on what the history has told us before, and now we're looking at it to evaluate it. Drawdowns between November and end of the year should be muted because the Federal Reserve Board, the unemployment, the global market has still been putting money into the market and in the economy. Every dip has been brought until things do change. Earnings are expected to increase. Some companies will do well, some will have a retracement. Don't get stuck on the stories in this news market or the stocks or the TV that's on the box by listening to people telling you what to do. Evaluate the chart yourself. There are some cracks in some bullish patterns in stocks. We do not assume anything. We look what's given to us day by day, week by week, month by month, and evaluate if we should be in a position or out of a position. Don't turn a winner into a loser. Trade the charts in front of you, no bias. Let the trade come to you. What I mean by it, you wait for the setup. Don't chase shorts and longs if you miss the trade. Ask how we can help you. And once again, this is for illustration use, okay? Let's go to the next slide. We can see I put the 5-year weekly on the S&P 500. I did not go further out than the 2016 halfway through 2021 from July to July. We can see historical, there has been drawdowns which have been muted as low as 0 and as high as 19. If we average out these drawdowns, these are the dates that have the rate of change or a momentum indicator like a Wilder or an RSI have given us the maximum high return with a drawdown on the S&P, and we can assume a 5% drawdown. This is the maximum days that's been down when we had the drawdowns. So let's evaluate each chart one by one, and we'll break it down to help us assume every instrument. Here I have the S&P, NASDAQ, and the Dow, the combination of the three without the small cap. Because it's a small cap since they changed the new contract from the TF to the RTY. Thinkorswim doesn't go historically that far, so I just combined those three without the small cap. We can see there has been small drawdowns every time from a baby bear to a mommy bear. Could we have a big bear drawdown? Possibility, but I'm not saying it can happen. So we assume what the charts give us. So let's go on a daily chart. We're going to go time frame. We're going to go daily. We're going to go to 9 months out from now on and evaluate each chart. Instead of weekly, we're going to go to daily and push OK. We can see that the combination we had, from the March low, we consolidated. We had the February as well as the January low. Then we came back up. This is the May low. This is the June low. We have to assume that the May, June, July, are still in an uptrend. We have an uptrend channel. We can grab it and connect those through. Just going to show how it looks like. Until this is proven wrong or broken, don't assume things, okay, everyone? We can have it from here, or we can have it from here, which is broken. You can see it. And if we grab it from this point here, from the June low to the March low, we are connecting still in an uptrend. We have the 50 SMA and the 18, and the weekly we had an annual high on the combination of the three instruments. And let's break them down one by one. We'll start with the small cap RTY. And the small cap, we do have the monthly range high and low. It has done double bottom. If you consider this a cup or this is a shoulder, and if this is the rounded bottom or those two bottoms, we are still in an uptrend trying to look up. Let's evaluate it because it's been range bound since January when we broke out. In February, we've been going sideways. Let's take a look at the Dow YM. We can see that the Dow recently just made on this week an annual high. It broke the prior week. If this is considered the cup, this is a rounded bottom, and this is the triple top. Are we breaking to continue back up or not? This level is no longer valid. I still have it on the chart. We have to remove it. And I did have this one when we broke down in April. We got to remove it. So what I'm going to do, we can either connect the February or the March to the nearest high, and we can see we are still in an uptrend going higher, unless we broke the down channel here that I have zoomed in on the chart, which connects this one here. If we fall back to this breakout, then we look for the downside. Let's take a look at the NQ, NASDAQ 100, and we can see that the NASDAQ 100 still have been climbing since the March low. We can connect this here with this one here. You can see it's still in an uptrend, and we can connect it to here, still in an uptrend. That is very far away from the 116 SMA and the prior consolidation here on this candle. We can remove this one, remove drawing, because I have a line there, and we have the 50 SMA. If I zoom in from June low to the July low, we rounded ourselves. We fell halfway, then we rounded ourselves and continued higher. If I connect these three dots, we're still in an uptrend. If the NASDAQ cannot catch up and clear this prior high, you look for the 18 backside of this channel and eventually the 61 and the 50 SMA. Remember, there is sector rotations. Let's take a look at the ES. We can see that the ES is in a similar situation from March low as well as the May low. So we can zoom in on the May, and we connect those three dots to keep us in line, in relationship where the uptrend is. So we can see that we are still in an uptrend. We are away from the 18 and the breakout. We are away from the 50. We had an annual high this week on the S&P 500. Let's take a look at GC. I want to go to gold, the first one, or you can look at GLD. We can see we had a major reversal in the currencies, the Aussie dollar, the Japanese in relationship to the American dollar, as well as gold. It retraced back. We were looking to go back up. We created that rounded bottom, came back halfway, pushed up. Unfortunately, it couldn't hold. Eventually, we looked like we had three tops at the 1825, 1830. Couldn't hold it, and we fell back through that 21 channel, and we had a major collapse in gold. That means the monthly fib have been taken out. We have to keep an eye on that 1750. If this is taken out, we have to look at the next support, which is this consolidation before the breakout, to see if it holds us to keep us intact, or we would retrace to the backside of the symmetrical triangle that we've been in for quite a while in gold. Let's take a look at CL. And you can see CL, similar situation. You had an annual high, then in July fell down. We tried to retrace, and eventually in the last 4 days, it has fallen down. Thursday was trying to pick itself back up. It couldn't. It looked above on Friday and fell back in. Keep an eye on this channel on the daily and the 116 SMA. This is a very critical, goes way back, because if we lose this, there's nothing to consolidate except in this range here, or the prior consolidation, which had caught us when we went up here. We tested it, went up, retested it, went up, came back to it where the breakout was. This is an important area for crude to hold in the 200 SMA and the 116. So let's take a look at now BTC. Everybody's getting hyped up about crypto and Bitcoin and Ethereum. We can see we retested this area but couldn't get this gap. We retested that annual high, which was the 29. You can see 29,700 in December, and we looked up. We had the gap. We fell down. That's where we called it. Then we had a secondary gap, which we never filled, and we fell back down. We've been zigzagging. Eventually, this is the first time that Bitcoin has this gap, and it gapped higher, and it has been continuing. If you look at it, if this is considered the basically the shoulder, this is the head of it, which wasn't as low as this, then it pushed up. Is this the cup and the handle of it to continue to fill this gap? This gap is very important. This is the candle that took us down. We retested it on Friday. Does it continue to fill this gap, or do we reverse from the mean back down on BTC? And you have to look at the major channel where it broke out of on the daily chart. I'm not biased to either side. It's still bullish. It is continuing. It had those three soldiers. Consolidation came back, retested the breakout halfway, and created three reversal bars with a hammer. It does not mean that it has to continue higher, but if it does, you look for the 61.8 on the annual chart, fib extension, which is 161, 116 SMA. And if it does retrieve back below the 42,500, be careful of it. So no bias to either side. Let's take a look at Ethereum ETH. Oops. /ETH. Oh, come on. /ETH. It's my fault. It's the operator. We can see Ethereum has done a similar situation from that double bottom. It created that V shape or W shape. It's got this gap. It gapped up. This was the channel that was holding. Then we have a major one down here, but it's trying to recover and clear the 161 because this is the candle that took us down. If it cannot continue up, you have to look for the reversal of the backside. Of this channel no longer valid. We have to remove it, but you have to keep an eye on a channel from here to here with no biased opinion that this channel will hold. This is no longer valid. We have to remove it. So this is the major channel. We are still in an uptrend. If we connect this dot with this one, everybody's looking at it. It can continue high. You can see either one I do take. It's still got a little bit more room to run. But if it doesn't, be careful of it because you retested this candle here almost. This is halfway through the body. If you look at the body, if it clears this body here, then we look for the upside to continue. If it doesn't, be careful of it. Let's take a look at now some ETF and some equities. I'm going to first start with, let's do the TLT. I'm going to start with the bonds. This is the long-term bond market. We can see that we were looking up trying to fill this gap. You see it, we never filled it. We came back, we got a rounded bottom, looked up, came back in, and last week the bond market fell down. If interest rates are spiking and inflation, pay attention to it. If we look at the IEF, it's in a similar situation. You can see the reversal. This is a major drop in it. We can take a look at the TI, does it have it? TIP? Tip, yeah, iShare Trust for broker-dealer ETFs. We can see the same situation. We fell back down because you remember, the overall market has been, some of the sectors have been doing well, some have not been in relationship to the IEF. This is why I put it to show you that there are sector rotations in the market, and that's why I used the TIP and the IEF and the TLT to show you in relationship to where the SPY is. We can look at the SPY now, which is the Fortune 500 ETF through spiders. We can see it's still in an uptrend. This channel have been broken from before, but we keep it as a line in the sand as of May, March, and April. This is the June. We do not want to lose the July in order to come back. If we're gonna reverse back from the mean, because this is the up channel, unless we can consider this is a down channel from here. We can connect these two dots here. You can see that there is a major channel here and the 50 SMA. If we cannot continue higher to the upper channel and we reverse back, we have to look for the 18 SMA and the consolidation in the prior week, because it took us 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then eventually on Friday, the 11th day, we looked up. So that's spiders. Let's take a look at the IWM, which is the small cap in relationship to the consolidation we are trying to look up. But we have the 50 SMA as a line in the sand. If we're going to continue, we have to break up, and we need the small cap to continue to keep the market up. We can look at the QQQ. Similar situation. We're going to go right now to the RSP. We can see in the RSP Invesco Exchange Traded Fund as equal weight. This is an equal weight, and this is why I put it. It created an annual high for the year after breaking the 152.50 area. So let's keep an eye on that. We can take a look at in relationship J and K. We can look at the overall sector Bloomberg all the sector combination. We can see that we had a nice retracement back down, trying to catch its breath. Do we fill this gap to continue higher, or do we fall down? You have to pay attention to J and K. Let's take a look at the XLK. This is the Spiders ETF technology. You can see we retrace back up. XLV. This is the healthcare sector. XLF. We're pushing back up in the financial sector. The banks were very strong on Friday as well as on Thursday. We can take a look at the PEG. I'm trying to go through different sectors. Invesco Exchange Traded Fund as well. You can see it dynamically linear. I mean, this is more of an overall, similar to, like when you go to have leisure, you go to hotels, you go to casinos. So it has been dragged down due to the cases that are rise in COVID-19. Is this just a flu? They're trying to make it look very dramatic and causing people to go back to retrieve to their homes or stay out. So let's take a look at some AAPL. You can see Apple range bound in that symmetrical triangle, and after the dividend has been paid, the earning, it fell back down. We can take a look at Amazon. You can see Amazon on the gap down, fell down, has been in that island, cannot get itself out of the way. Let's take a look at Google. We can see that Google still on a grind up after the earning report, but has filled the gap and still side range bound. Let's take a look at NFLX. Still in like a double hook at the bottom. Does it hold or not? Let's take a look at Tesla. You can see Tesla has retrieved back a little bit after the earning report. Does this continue or reverse back lower? Let's take a look at Wynn Resort. You can see Wynn has retrieved back up on Thursday, and on Friday it had a consolidation day. Let's take a look at Boeing BA. We can see Boeing's trying to come back up slowly. If we can clear this channel, we can look for the 6150 SMA and continue higher. Let's take a look at LMT. I'm going through them very fast. We can see Lockheed Martin has retraced halfway. If we take this move from here to here, we are coming back to that consolidation area. This area has to hold in order for Lockheed Martin to continue going back out. DE. You can see DE is coming back. CAT, Caterpillar. We have to keep an eye on Caterpillar for construction, roads, drilling, and all kind of stuff. Let's take a look at Ford. You can see Ford has retrieved a little bit back. You can take a look at General Motor. Because remember, there's steel, there's chip manufacturers, there's semiconductors. I've done some last week for everyone. So I'm just making sure that everyone pays attention. XLP. This is the consumer staples. We can see that we are consolidating. We retrieved a little bit back, but Thursday, Friday, we had an inside day trying to pick that engulfing candle lower. So I hope this was helpful. Let's go back to the ES and take a look at the profile on the Fortune 500 company. And we can see that, let's zoom in. We are in an annual high. We're going to go to style. We're going to go to standard. We're going to look at the monkey bars. We can see that the consolidation, this is on a daily bar. Monthly continuation, this was last month's POC, so the sentiment's still up unless we retrieve back down. We're going to go from daily. We're going to go to 10 days, 30 minute. We can see that this consolidation has been range bound, where we had the POC looked above, came back down, looked up, came back down, looked up, came back down. The POC closed here, then we looked up, then we looked back down, and we eventually broke up. So this is the range that we have to pay attention to. And this low here on Monday, do we continue above and continue, or do we fall back to the major consolidation of the last 10 days in the profile to continue higher? Because this is a very critical area. 4,400 is a mental number, and 4404.50. This is a major consolidation between that area and 4408. So pay attention to what the technicals give you. I hope this was helpful. I look forward to seeing you on Discord, our website. And if you need any assistance, ask us help. Take care.